you look at this slide, it's talking about growth in funds. It's not growth in AUM, yeah?
It is actually. The second one is industry FUM. Yeah, that's right.
So the first one, I can congratulate the fund managers because they come up with new funds. The second one, I don't congratulate the distributors because they don't sell the funds. Correct? Now, so I think the reason there has been a an increase of number of funds as shown in the first slide is because Islamic funds have not covered the breadth and the depth as compared to the conventional breadth of funds offered. And portfolio and fund managers wanted to make sure there is sufficient risk profiling for the Islamic funds, and as such, there is the increase in number of funds. And secondly, as you look at the type of funds that is being increased, I am suspecting that it is actually more of the global, more of the regional, more of the tactical, and more of the thematic funds. And these Islamic funds has to be there if we talk about diversification. Everybody talks about diversification. So diversification within an Islamic framework to the extent that an Islamic a faith-driven investor or an investor who would prefer to have an Islamic total portfolio would have a total risk profile in number of funds.
Thank you, Dr. Noripa. Sandeep, what are your thoughts on that?
Yeah, I think Islamic, one I think is starting off from a small base. So obviously, I would expect from a percentage perspective the growth to be fairly healthy. I think that always happens when you're on a small base. The second, I think, is Dr. Noripa mentioned that there are players who are trying to launch funds which are in the Islamic space, maybe more international or going beyond the shores of Malaysia. So I think there is some genuine product innovation which is happening there, and there's still a long way to go because it is still a small industry. And I think as more awareness is created, as more players join in, I think now there are about 19 dedicated Islamic fund managers which are registered with the SC. So it was definitely it's increased quite a bit over the last couple of years. So I think as more players come in, as more international players come in, the bar is being raised, and there is more awareness. I think also some of the investors have realized the benefits of investing in Islamic funds, as they have shown some resilience through the financial crisis. They may be seen as ethical, defensive, not to generalize. They could also be, we've done some research that the Sukuk asset class is not that correlated with some of the other asset categories. So I think as awareness is increasing, as people see the benefits of true diversification, I think it's attracting all types of investors, and I think some of the biggest players in Malaysia shows that it's not just faith-based. It's open to all investors, and as long as the funds are doing well, there is an appetite from investors. The money will come in.
Thank you, Sandeep. Right. Whilst there is positivity in this growth trend, if we look at the next slide, there is a trend line that tells you the average amount for Islamic funds, or rather the average investment amount by the unit trust investor for Islamic funds, has been consistently lower than that of conventional funds though. Encik Raza, do you think that this is a result of a lack of demand from retail investors?
Well, I think it could be a combination of few factors. I think for the first of all, like Sandeep said, the Islamic funds start from lower base. I think maybe the number of accounts are larger, but the number of investment are lower. Maybe they are attracting more of the younger generation that's more aware or whatever. So there can be a combination of factors that may affect this number of investment. Because we must understand the conventional fund has been around longer. So those accounts have actually benefit also from the growth of the NAV longer, meaning they may not invest whatever they invest 1 year ago. You know, for example, my fund over 7 years, they make 100%, right? So the amount that they have now higher. So that kind of thing. So that is a combination of factors. Whereas the Islamic fund are newer, they've been launched recently, so it takes time to catch up. But what we could take from this is that the amount is still on a growing trend. So as long as this growing trend continues, that should be beneficial for both the conventional and the Islamic funds.
Thank you, Razak. Let's look at the conventional bit though. What explains that big drop, in terms of the year-on-year comparison from what was 16.5% to 5%? Could it be due to market factors in terms of conventional funds, investment accounts in conventional funds? It registered a relatively large drop from 2011 to 2012. Do you think that there's any factors causing this relatively critical drop for at least 1 year?
Okay.
Could it be maybe an influx of new products, as in alternative investments in the retail market?
From my point of view, I think the drop, I don't really view it as a drop, right? But if you really ask me, I think that it's more toward the awareness, right? The awareness from the Islamic product, right? After the financial crisis, I think this Islamic product have already start to be perceived, correct? To be perceived as a product that actually moderate in terms of the risk and return ratio. So before the crisis, everyone are chasing for return, right? But after the financial crisis, I think people start to a little bit more worry and all this. That's why you see the number of funds have increased. AUM itself is actually increased. But so we can see that these investors start shifting, all right, the focus from just purely chasing for return, all right, but looking at something which is so-called lower risk or less volatile. So for this, the chart showing from the 11 to the 12 the time, it reduced, right, the investment account for this
conventional
per account for conventional. Personally, I can't really see the reason actually. Yeah, I see the reason. But if you ask me that for people to invest into this Islamic fund, then basically it's more toward the awareness and the educational part, right, whereby it educate people to actually start to put in more money into the Islamic fund.
Thank you, Dennis. Thank you.
Can I just
Sure.
additional comment? The panel mentioned about education, awareness, as well as the low volatility, resilience is investing in Islamic funds. I would actually like the financial consultants to have a very important takeaway, because it's my passion when you talk about Islamic investing. To the extent that I have actually an industry frustration, and I have actually written a book, Investing in Islamic Funds, a practitioner's perspective, which will assist you to sell Islamic funds. It is actually a case in investment that uses empirical evidence and track record for the last 6 years amongst the conundrums and the black swans that created the volatility. Now, I think it's important for us to remember that when you position Islamic funds, this motherhood statement, which we just mentioned, it's less volatile, it's resilient, is under the bridge. The debate has shifted into wanting to know what are the characteristics in these Islamic funds from a portfolio manager's perspective that causes it to be resilient, that causes it to have the track record of uptrending and outperforming the conventional, whether it's in the bull or in the bear market. And then I would actually encourage the financial consultant not to just sell Islamic fund because it is giving the same performance as the conventional. I would actually encourage you to understand why it's performing like that. For you to be a trusted investment partner, you have to look brilliant in front of the investors. You have to look educated, you have to look well-read. And as such, you have to go deeper now into a more professional approach instead of just an empty code when you actually meet your investors. So if you actually look into my book in chapter 6, 7, and 8, it will actually educate you to understand the characteristic and the Sharpe ratios in the respective indices that would actually causes Islamic investing to be resilient. And for you to position, it's no more talking about it's halal. For you to position, it's a lot more of value proposition and economic values that come along with it. You know, so it's important that the way you position Islamic fund, try to convince the investors the characteristics that underlies the portfolio.
Thank you, Dato' Noripa.
Dinesh, I may be wrong, but I have a little bit different observation on this slide. I think that if Islamic funds have a lower investment per account, that shows it's more retail, not the other way around, because you don't have the very rich and the high net worth individuals, and that's why they tend to typically raise the investment per account. So it could be that, you know, the private banks or the high end of the consumer banks are a little bit missing on this segment, and it's more through, you know, the financial planners or, you know, the more retail side of the banks which are promoting the Islamic products, and that's why the investment per account is lower. So I mean, so I have a little bit of a different view.
Yeah, good analysis. Good analysis. Thank you for that. Right. Now we're going to still stay at this in this vein, and I'm just going to move on to the third theme, which is overcoming market competitiveness. Should it be product innovation or client-centric strategy? So if you look at it, there are currently over 600 funds in the Malaysian market, covering nearly all available geographical and asset categories. In the vein of sustainable growth, do we need more product innovation or stronger client-centric strategies? It's a bit of an interesting question, this one. So, Dennis, what do you think? As a, I guess, open architecture distributor, product innovation or more client-centric strategies?
For me, I think the answer is very clear. Over 600 funds in the country, and we probably will double it or triple it after the market start opening up. So for me, I think number of product or the innovation of product is no longer an issue. Right? So it's more toward something whereby focus on this client-centric. Time to actually pushing a product, whenever there's actually new product launch and all this, it's already over, basically. Right? So you can see that now, whenever there's a new fund launch and all this, it's no longer like last time, whereby there's every time new fund launch, they're able to raise the 200-300 millions and all this. Right? Basically now, whenever they launch a new fund, they can break even, they're very happy. Right? So now investors are started looking at the fund with consistent return. So those core funds that most of the fund house have become important, right, because of the consistent returns and all this. So and investors have already learned and realized that successful UT investing, right, is looking at the fund that actually able to give you a consistent return rather than choosing new fund. And the few key elements, right, need to be there, right, for this so-called client-centric, right, is I think one of the very important thing is interest alignment, right, whereby is currently is very much lacking in the industry. So you're looking at a bit sensitive for these things. So we are looking at, say, sales charge. All right, just how we are discussing about the cost of investment. All right. So when you wanted to have a client-centric strategy, all right, but at the at the other end, all right, the way you are be remunerated is by commission. So how these two things is actually conflict in a way, all right? Because you try to sell the product to the investor is mainly driven by the commission. So how you were able to have a strategy, correct, to actually ensure that you are in line with the customer. So I think the interest alignment is very important. So when you're looking at the Southeast developed country, like UK, Australia and all this, they are already start to actually ban commission. I'm not so sure when this will come to Malaysia.
Okay.
Yeah. But I think it's very important that the interest alignment, it need to be in place. Yeah.
Thank you, Dennis. So Dennis is 4 client-centric strategies. Encik Raza, what are your thoughts? Do we need more product innovation, or do the unit trust consultants focus more on advisory process, interest alignment, as what Dennis has just mentioned?
Well, I think after more than, I think our industry is now entering more than 20 years since the
Easy.
Easy. So I think with all this, as the industry mature, of course, and based on whatever happened in the last 20 years, the industry is moving towards what, like you mentioned, client-centric. In terms of, like Danny said, how we want to align our services to actually be met. Okay, as you can see from Mr. Eugene keynote address just now, SC is also asking us to please make sure put the client interest in front. So we must understand these new trends, and we must constantly adapt ourselves to meet these new challenges. And not only that, the audience that we are sending our products to or our services to are also changing. More and more of our those who invest earlier have now reached their retirement. Now they want to redeem, to enjoy their retirement, that kind of thing. And we need to replenish our client base with those from the younger generation. So there is a lot of challenges that as an industry that we are facing now. That's why I think, of course, one of the areas that we are looking is about how to reach the Gen Y, and we must now have internet access, that kind of thing. So there's a lot of things that all of us have to evolve to. So this is what I say can be both an interesting time for all of us. But to me, as long as we constantly realize that nothing is remain the same and try to improve ourselves, then definitely we can actually adapt to all these new challenges.
Thank you, Encik Razak. So we've got two speakers, 4 client-centric strategies. Excuse me. And I'm going to pull up the slide that will allow the other 2 speakers to see whether client centricity or product innovation is the right way to go. If you look at the slide, okay, here we go. If you look at the slide, what that tells you essentially is the infamous invisible competitor you all face, which is fixed deposits. Fixed deposits has been growing at an average of over 10% annually for the last 3 years. I'm just taking a very quick snapshot, 3-year snapshot, registering 670 billion ringgit as at June versus 330 billion for unit trust funds. Now, when I first came into this industry, the figure 250 billion was being bandied around, and I thought that, wow, that was already huge, and that was in 2004. 10 years down the road, it is now at 670 billion ringgit. So on that note, right, Sandeep, let's start with you. Which factor do you think consultants should focus on to convert these fixed deposit holders and promote funds as a staple in building long-term wealth, comparable to a certain extent, I'm just generalizing, but to a certain extent to FDs? Client-centric strategies or product innovation?
Yeah, I don't think there's been too much innovation on the fixed deposit side. Never has been, I think, in any country. So I think I would probably be more tilted towards being client-centric, but I think a certain amount of innovation is required in the industry. I think it's not necessary that every new product is genuinely a new product. You know, as they say, it could be old wine in new bottles. And so you need to genuinely see, is this product, you know, available? I mean, if I can get a little bit, you know, I should not be talking about Franklin Templeton here, but we recently launched a US equity fund, and I was surprised at how many US equity funds were there in the market. And you can probably count them on your fingers. And US is 46% of the global market cap. So I'm just trying to say that I think there is need for product innovation, but obviously, end of the day, it needs to fit in with the client requirements. I think there is a need to offer different share classes to investors. It need not be one currency. As I think there's probably a little bit more innovation on the fixed deposit side because they do offer multi-currency deposits. I think pretty much the industry here is more ringgit denominated, which is fair, but I think as we evolve, there will be need for different share classes, whether it's institutional. A 5 million ringgit investor doesn't want to be treated the same way as a 5,000 ringgit investor, and that's the reality around the world. You may have, you know, liabilities in different currencies, so you may have to have different share classes. So I think that is something which is going to evolve. But I think fixed deposits, even while coming from India, I think the big challenge there was not only competing with the fixed deposits, but also the gold, money under the mattress, you know, real estate. So we